Hey guys, what's going on? Welcome back to another video of Millennial Wealth, guys. I am your host, Miguel, and today we are gonna be talking everything stock market in the past. It hasn't even been a month, guys. It's been about 3 weeks since the whole Rona situation got off hand, and everything has pretty much go into a big mess, guys. I want to start by saying, right, I created this channel for my young viewers, right? A lot of the people that follow me on Twitter, a lot of the people that I interact every single day, guys, they just don't know about investing. They just don't know about personal finance. And it's something that I didn't know 10 years ago, and I wish someone would have told me. So the main purpose of my channels, the main purpose of my videos is talking to you all and hopefully trying to put some sense into you that no one did to me, right? My parents didn't taught me this, school didn't taught me this, nobody taught me this, because it was just one of those things, whatever, right? And I think it's a generational thing, right? My parents wouldn't have pension, they would have been taken care of, they have social security. We don't know what's going to happen with us young bucks out there. So this video is for you. So what had happened since the February 20th? Well, the market as a whole has completely crashed, right? We passed a correction, and we got into the bear market now, guys, meaning that we are just going down. This week, by the way, the week of the March. Week start on the 8th, market open on the 9th. We had three this whole week, by the way. This week right now, we had 3 of the worst days. The top 3 days on the S&P 500 on points drop, right? Which is not the same saying points as a percentage. However, we had the biggest percentage drop since 1987, which was the year I was born. So definitely this is going to be something we are going to be talking in the future. This is history in the making, and if you guys are young and you guys expect to retire in 30 years, you're always going to hear the crash of 2020, which it's actually a kind of like a cool name for it. 2020 crash, 2020 recession. At least it's 2020. It sounds better than 2019. I think it'll be catchy in the future, and we'll look back. So what does this mean, guys? This means that every single company, it doesn't matter what you did, right? Unless you were doing like medical equipment for the Rona, it means that everyone else, guys, just went down, right? So the market as a whole just got pulled down, which means that if you have 10 plus years outlook, right? If you don't need this money, you don't need this amount of money, guys, for 10 more years, this is the time right now that I would enter the market, right? I've been investing in the stock market for about 12 years now. I think I entered right in the 2008. Yeah, I entered right in the 2008 into the market, which was a great time for me at the time, right? Because we had the 2008 crash. So since I've been investing in the market has always been going up. Look, I don't know that I've seen the market ever going down. Yeah, the S&P 500 has gone up since 28 nonstop. We had some minor corrections here and there, but nothing too grave. So it's always been good for me. However, I knew this day was gonna come where we were gonna get the big one, and I'm glad that I'm part of it. I'm not excited. I don't think no one is excited about losing money. I don't think anyone is excited about the world not doing good. I don't think anyone is excited in general about that. So it's, I'm trying to use my words here carefully, because it's not an exciting time, right? I log into my 401k, I log into my Robinhood account, and it's not fun seeing 50,000 losses. It's not fun seeing my account going down for, $100,000 in a week. No, it's not fun. But it's an opportunity, right? I believe everything can be used as an opportunity. And right now there are excellent companies, guys. There are companies that have done nothing wrong. There's companies that are going to be here in 100 years. There's companies that are going to be here in 150 years, guys. I like that statement, because you can't disprove me, because I'll be so dead by then that no one can say anything. But companies have been pulling down that they call them blue chip stocks, guys, and those are the ones that we really have to be looking at. I've been buying, as always. It doesn't matter what happened, guys. I buy every single Friday. It does not matter. I will buy every single Friday. I bought every single Friday when the S&P 500 was at 337. I bought every single Friday today when the S&P 500 it's right at the 260 mark in the pre-open. So I buy every single Friday. I haven't changed my strategy. Now that a lot of companies I really, really love are falling down in price, I've been using some of the spare cash I had on the side and buying more. I bought a lot of Microsoft, a lot of Visa, a lot of Costco, Target. It's just companies that I really love, right? There's this list called the Dividend Kings that it's these companies that have been increasing their dividend for 50 plus years. You know, you got Coca-Cola, you got Target in it, you got Lowe's, the renovation hardware store. We got like AbbVie, which is a pharmaceutical. I own all of those, by the way. And those barely ever dip, right? Because they don't do anything wrong, right? Coca-Cola, everyone's going to drink Coca-Cola. Everyone's going to be using Office. Everyone's going to be using Windows. Everyone goes to Target grocery shop and everyone's going to use Botox, right? So those are companies that barely dip. If you look at the Visa trend, guys, it's just a straight up rocket. So getting this entry point in Visa and MasterCard, it's really exciting for me that I can get them at lower price. Why? Because I think 5, 10, 20, 30 years from now when I retire, this is going to be irrelevant. The price of everything today, in my opinion, it's irrelevant to when you look with a 10 plus year outcome. I am going to be excited in 20 years when I look back and I say, holy crap, you guys remember when we used to buy Microsoft for under $200? Those were the times. Just like well, not my parents, but just like a boomer right now would look back and say, remember when we used to buy Coca-Cola for $5? The stock, not the drink. The drink always been under $5. But I think it's not the time to be risky. Airlines I think will be okay. They've been hit the worst, guys. Airlines like cruise ships, like hotels, those been hammered down, which, I wouldn't put my money right now in Carnival Cruise. I had some pre-market before the market crash because their dividend was so good. I think that money it's long gone, and I don't know that we'll ever see it if we see it. Delta, I may dabble a little bit into it, but this is what I'm trying to say here. It's not the time to be risky. It's not the time to be like, oh, I'm gonna see what happens here. It's the time to get really good deals on companies that have done nothing wrong. My word of precaution, guys, and I want to switch here to my monitor. Word of precaution. This is the S&P 500, which the S&P 500, it's not a stock, guys. It's an index. It has 505 companies in it, and it tracks them down as a whole. If you look 5+ years, right, we're still doing good, right? Because we were at 2,000, 2,100, and now we're at 2,800. So, if you bought 5 years ago, you're still in the profit, even with this dip right now. However, this is not what I want to bring everyone the attention. It's mostly when you look at this segment right here, right? We got the 2000. We got a big crash in the 2000 with the whole dot-com bubble. Then here we got the housing market that happened right here. We have September 11 combination. We got a lot happening here, right? But I just want you all to be very conscious about the money you put in the market. It's not the time right now to go and get a loan and invest that money. It's the time that, maybe if you can get a part-time job and get some more money to put, I would do it, right? I do it with YouTube. But look, if you were to put money, and I know that comparing picks suck, but if you were to put money right here in the 2000, right at its peak, it would have taken you guys about 12, 13 years to not even break even, because I think you could have break even here in 2007 before the housing market. But to make some real profits, it would have taken you over 13 years, right? So that's something that I want everyone to be very wary that, yes, the market right now took a big tumble, right? We in the past year, we pretty much the S&P 500 it's down. And I don't want everyone to think, in a month from now everything's going to be back to normal. It's like, oh, nothing ever happened. because nobody, not a single person on the planet knows anything about what's going to happen today, what's going to happen tomorrow. I'm guessing today, Friday the 13th, we're going to have a positive day, followed by a negative day, followed by a positive day. Who knows? Right now, there's way too much volatility for my liking, which is why I'm trying to stick to, conservative plays. I don't know if we'll see 2008 lows, because in 2018 lows, I'm not sure if we'll see those December lows. Everything is possible, I guess. But look, those were 24.16 and we're at 24.80, so maybe we'll go under that, but who knows? I don't know. That's for sure. I cannot tell you. But what I'm saying is, invest only money you don't need from now. I think, and this is my personal opinion, by the way, and I always tell everyone, I even tell this to my sister, which I love. I said, don't put any money anywhere just because I'm telling you. You got to understand the risk. You have to do your own research. You have to read on it, because it's your money at the end of the day and you're fully responsible for it. But don't go into this crash thinking that next month everything's going to be so good and everything's going to be so nice, because it may, but it also may not. So think yourself before you buy any stock. Am I fine not getting money back for the next 13 years on this? And my answer, it's yes to me, right? Because I get dividends from most of my stock, right? So even if it takes 13 years for me to start making money on them, you get dividend paid. Look, Microsoft, guys, that's such an unfortunate tumble. 139, and you know what, guys? There's a new Xbox coming this Christmas, right? There is company still growing. Microsoft has the best balance sheet of any company I've ever seen. I love them. They have cash. They don't have a lot of debt. They keep growing year after year. Even though they're a $1 trillion company, they still keep growing, and I really love them. That's why I have so much of them. If you look someone like Visa, another company that I really, really like. Why? Because Visa is not a bank. Visa doesn't give people money. Visa just facilitates payment. Visa hardly ever dip, guys. Look at this. It's a straight up rocket. Back in 2018 in December, when that little correction happened there, everyone went down, but they recovered and they went stronger than ever. I think in the long term, they're just going to go stronger and stronger. Anyway, guys, that's it. I just wanted to check on you all, see that everyone was doing. At the end of the day, guys, it's just money, if it's really causing you some emotional stress in your life, don't look at it. If you it doesn't serve me looking at it at all, because I'm gonna buy every Friday no matter what. I'm not gonna use this money for the next 30 years, so who cares, right? So if it's really causing you some emotional stress, some pain, well, don't look at it. However, if history, which doesn't mean that the future is going to look like the past, because past events won't predict the future, has taught us anything, is that we always bounce back, we always come back, and we always make it back. So I think this is a very sad event. I think it's extremely sad. I think it's extremely, it's nothing to celebrate, but I think it's a good opportunity for anyone that wants to get serious about investing. If you guys are investing for retirement, this is the time that you guys want to be maxing your 401ks, your Roth 401ks, guys, because there's a limit. You can only put, I think, $19,000 a year. There's a limit of how many you can put on a Roth IRA, guys. This is the time, in my opinion, to do it. Do it slowly, right? That's the good thing about the 401k. When I get paid, a little bit of it goes to it. So it's always dollar cost averaging. So it's not going all in and just putting a bunch of money at once and then it goes ups and downs. It's just little by little by little, which is, what everyone should be doing. But anyway, guys, I'm going to wrap it up for this video right now, guys. Let me know down in the comments if you have any questions. I'm here for you. I'll answer them as best as I can. But right now I'm buying, but it's not because there's a crash. It's not because there's a correction. It's because I'm always buying, period. So it in my mind, in 30 years from now, the price of now, it's so irrelevant, guys. It's, and I like how I'm saying buy and I keep talking, but imagine saying, oh, did you bought, no one's gonna ask you if you bought Amazon at $200, $300, or $400 when Amazon is at $2,000. So anyway, guys, thank you all for watching. I hope everyone's having a fantastic time, a fantastic day, and I catch you all later, guys. I'm also buying Tesla, but I'm always buying Tesla. Bye.